Well, good evening, ladies and gentlemen. My name is Adrian Day. I'm one of the co-hosts of the On the Move webinars. I'm going to introduce the co-host in a second, but we have a very special guest tonight. And my co-host, Rich Checkan, will introduce him. Rich, as most of you will know, is the president, COO of Asset Strategies International, preferred choice for precious metals, both purchases and storage. And he'll tell us more about his company in a minute. But why don't I turn it over to you, Rich, to introduce our special guest.
Thanks, Adrian. And obviously, the folks that have been following us for years know Adrian Day very well. Incredible resource asset manager, international asset manager. He's basically our go-to guy when it comes to resource stocks, has been for a long time. He's written books. His most recent is Investing in Precious Metals. It's got a long title, but I've got it here. But the bottom line is, if you're interested in resource stocks, you need to read this book, period, full stop. Adrian's been a good friend of ASI for a long time. I think Michael met you 40 years ago, and I had the privilege when I joined the firm 26 years ago. And I'm really glad you've joined us to host these webinars quarterly. Tonight, as Adrian said, we have a special guest, none other than Porter Stansberry. And I am not going to go deep into his bio because I think most people know Porter. He's the founder and chairman of Meadowdale Holdings. He started rewriting basically financial analysis and newsletter writing 25 years ago when he started Stansberry Research. I was fortunate to get to know him and his friend Steve Sugarud, Dr. Steve Sugarud, when Steve was still the investment director over at Oxford Club. And I remember after we first met you guys, Michael came back and he said, those two are pretty special. You want to keep an eye on them. He was very right, obviously. Porter's got a knack for digging into companies, how they operate, and the news that we can all touch, right? And we see it every day. But Porter has a way of kind of distilling that down and finding the things we need to know as investors to either be wary of from the risk standpoint or to profit from the investment standpoint. I just want to share one thing, then I'm going to hand it over to you, Porter, for the first question. But, you know, whether you like Porter, hate Porter, you're in the middle on Porter, I will tell you, there's no question we love Porter here at ASI. And part of the reason is we love doing business with people that do business the way we do business, which means take care of your customers. So a number of years ago, I don't know if you remember this, Porter, but we were going around, we had this new online precious metals platform. We reached out to a few different newsletter writers and analysts and said, hey, would you be interested in mentioning this neat product to your readers? And virtually every one of them had the same answer. How much do I benefit? What do I make by offering this to my readers? Porter was the only one who answered it a little differently. He said, first thing out of his mouth, how do my readers benefit? And that is Porter in a nutshell. No matter what you think of him, that's the Porter I know. And that's the Porter I'm happy to welcome to the show tonight. So welcome, Porter.
Yeah, thanks for having me very much. And yeah, the way I've always written newsletters is you pay a subscription fee to me and I don't take any other form of benefit from any vendor, from any company. There's no advertisement in my model. It's strictly subscription only. And thank goodness, because as you know, I've written some incredibly controversial things. So we would have lost all of our advertisers along the way.
Well, so Rich, can I just interrupt a second?
Yeah.
You said Porter was the only one. Did I ask you how much?
No, I'm sorry. Newsletter writers. Okay.
Okay.
Right. Now you write a fantastic newsletter, but it's your mining stock.
Gotcha.
All right. So with that being said, Porter, you're at it again. I mean, the last time you went out with a video where you had dug in and done some incredibly investigative journalism, I think it was called The End of America, and it was about 100 million views. And, you know, full disclosure, I think I was about 3 or 4 of those, but 100 million views out there. And you've got another one talking about some hard times, potentially Europe, Boston, and the rest of the United States. And I wonder if you could elaborate on the impact of energy and the potential problems and the benefits coming forward.
Yes, I'd love to talk about that. So I don't do this very often, but there are certain times in our economic history where the size of the dislocations are so big that it's not a question of if something's going to happen. It's only a question of when exactly other people are going to notice. And, Rich, I'm sure you remember back in the mid 2000s that the economic dislocations were so large. The economic problems in the investment banks and with mortgages and with companies like General Motors were so obvious. As I was telling you before our meeting, in 19 out of the previous 20 years that when General Motors filed for bankruptcy in 2008, in 19 of the previous 20 years, they had to borrow money just to make the interest payments on their existing debts. This is not a viable business. There's no way it avoids bankruptcy. Now, why is it that it's only a newsletter writer from Baltimore who's willing to tell you that? That's something that really goes to the heart of the real deep corruption, unfortunately, in our financial markets and our government. Everyone wants to kick the can down the road. No one wants to take responsibility for the bad decisions that have been made. No one wants to tell the unions, there's no way we can afford these pensions. We can't make money selling cars. So the problems get bigger and bigger and bigger until they're no longer financeable, and then it explodes. And those kinds of problems have mounted again, in part because of what happened during the pandemic and the outrageous government spending, but in part because we never really cleansed what was going on in our economy back in 2010 and 2011. And so today we find ourselves with a higher amount of corporate debt relative to GDP than we've ever seen before in our history. We have more government debt, of course, than we've ever had before in our history as a percentage of GDP. And with the inflation, because of the outrageous government dole-outs during the COVID problem, it's not clear to me even that the federal government can finance its treasury debt. If you were to apply a reasonable rate of interest on the $31 trillion in government debt, the government's bankrupt. Now, I don't expect for the government to collapse like General Motors did. I'm not saying that. What I am saying is that the Fed's ability to maneuver has greatly diminished. The government's ability to maneuver has greatly diminished. And we're entering a period of time where corporate debt stress is going to reach unprecedented levels. You've seen it early with Carvana. That's the most recent example. Collapse in used car prices means a collapse in all the collateral underlying Carvana's debts. Lenders aren't going to lend anymore. The last tranche of debt they issued was back in April. It was at a 10.25% coupon, and it had a no call period for 5 years. That's not a debt. That's a death sentence. Apollo that's called lending to own. There's no way the common shares are worth anything anymore. Apollo is going to end up owning that whole company. That's one example, but there are many. And my prediction is about 40% of the entire high yield sector will become deeply distressed, and you'll have defaults. I really hesitate to say this out loud because it's spooky, but you're going to have defaults in 20 to 30% of the existing outstanding high yield bonds today. Nobody sees that coming. And in terms of investment grade debt, there's something like 15 trillion outstanding in US investment grade corporate paper today. The models that the investment banks have that show what the distress will be is currently over 4%. They're predicting an over 4% default rate in investment grade debt. That's never happened. In the 1970s, it peaked at 1%. And it's just really important for people to understand that you have got to look at your own portfolios, and you have got to avoid investing in companies that are highly leveraged, especially if they're involved in commercial real estate, because that's a whole separate issue where people are not returning to work the way they were before and the offices are emptying out. So I think our economy really stands at a very dangerous point because the Fed doesn't have the ability to bail firms out anymore the way it did before, and because the debt cycle didn't happen 10 years ago. So we're going to have a double dose of it this time. When you add this other thing on top of it all, it gets a lot worse. And the other thing on top of it all is the ESG movement, which has made financing fossil fuels impossible. And so one of the things I'm really helping investors figure out is which of the fossil fuel energy companies can survive in an ESG world, which are clean enough to provide baseload power, which have the ability to export energy. And as you know, I've written about a story about these guys I call them the gods of gas. And they're three brothers, and they started an energy company about 15 years ago in Pittsburgh. And really from scratch, from their kitchen table, they became the largest producers of natural gas in the United States. And as you probably know, the United States is the largest producers of, our country is the largest producer of natural gas in the world. And so they are de facto the largest producers of natural gas in the world, the largest privately owned producers for sure. And their story is really amazing. And the operational excellence of the company is astounding. They've really, really changed the industry. So I'm hopeful that people will, during the coming recession, I'm hopeful that people will take the opportunity of lower stock prices to load into these very valuable long-lived energy assets, because there's no way to power the world without them. And you want to get them while they're cheap and out of favor.
Yeah. Now,
Are you focusing? Sorry, go on.
No, go ahead, Adrian.
I was going to say, are you focusing more on oil or more on gas?
I'm actually focused more on gas because for lots of reasons, but a big one being, I think that the trend towards electric cars is going to continue. It's going to continue for regulatory reasons. It's going to continue for the corruption of America reasons, but it's also going to continue because electric motors are simply better motors.
They're good cars.
Yeah, they're better. They are more reliable. You know, there's no question about that. So I think that that's going to continue, and I think that's going to create more and more demand for baseload power, and that's the role that natural gas plays in the world. And with the growth of the Marcellus in particular, and with the upcoming expansion of LNG exports from America, I think that gas is going to enter a really 50-year golden age where you're going to have consistently higher and higher relative prices for natural gas. And by the way, the news out today really confirms a lot of this hypothesis. If you guys saw it, China was locking up all of the additional supply from Qatar for the next, I think I saw it was the next decade. So China's going after this resource hardcore, and it's what supplies a lot of the energy to Japan, a lot of the energy to China, and it's where all the growth in energy is happening in Africa and India and in Europe. It's all natural gas because it's clean enough. And let's face it, there's not enough batteries in the world to make solar and windmills baseload power.
Yeah, so I was going to say, I know you've got a piece out there, and we're going to probably mention this a few times, but I think it's thebostonblackout.com. I encourage everybody to go take a look at it. It's, the story, the narrative behind what Porter's discussing here. There's a few pieces I want to get to of that in terms of, the role of energy and the boom that we've just lived through, right? As well as the what it has done to strengthen the US dollar vis-a-vis the rest of the world's currencies. But there's a question here that's kind of related to the debt and bankruptcy from Adrian Cantwell. He says, might the powers that be change the bankruptcy laws to avoid excessive defaults, or wouldn't that change anything? Basically, he heard that they're doing so already in Europe, trying to make them a bit more flexible.
Listen, there's nothing that I wouldn't put past our political leaders. There's no limit to how badly they can screw things up. That's for sure. But that doesn't change the fact that you do not. Look at the share price of Carvana. It's down 95%.
It's not Nirvana anymore, that's for sure.
Yeah, you don't. Whether they change the bankruptcy laws or not, they're not going to bail out the shareholders. Is my core point.
Right.
And you saw the same thing with Fannie and Freddie, right? They bailed out and in some ways a little bit the bondholders, but not really. They just basically stole from them. And AIG, the same thing. So you do not want to be involved in either the equity or the debt securities of a firm that is heading to bankruptcy. You do not want to take that risk.
Yeah, it's an unpopular position, but I feel like they should have done the same thing with the banks. There's no difference. You decide to put your funds with a bank because you feel that they are, stable, et cetera. If you make a bad decision, there's a penalty, for choosing that business. But I think, Adrian, you're going to say something.
No, I was just going to say, you made one extremely important, well, you made a lot of good points, Porter, but one comment we shouldn't overlook was when you said that, in the last recession, we never, and I'm not talking COVID, that wasn't really a recession, that was just a short-term sort of blip. We didn't let the system cleanse itself. And that has been the problem now for probably 40 years, that we're afraid to have real damage in the economy. And we should blame Greenspan for that with the long bailout of long-term capital, which was—
That's exactly where it started. I'm glad you brought that up. That's exactly where it all started.
And of all things to bail out, a hedge fund run by the smartest guys in the room is the least important I'd have a little more sympathy if they did bail out GM, but to bail out a hedge fund is just ludicrous. And that's when it all started.
Well, I just want to argue with you about that. They did bail out GM.
Yes.
They bailed out GM and they paid the unions 90 cents on the dollar and they paid the bondholders 10 cents on the dollar. It was an enormous economic crime and it doesn't get written about, but that's exactly what happened.
No, sure. But I think
by the way, how's that working out for our society? What's the share price of General Motors today? We are now, 12 years post-emergence from bankruptcy. The share price of General Motors today is lower than when it emerged from bankruptcy.
Yeah.
It's outrageous. It's not just a destruction of capital, but it's a burden on our entire economy. It's a zombie that's dragging us down.
Yeah, no, we should just allow certain companies to go bankrupt.
Bad business should not be rewarded.
You cannot have capitalism function without failure. Otherwise, you're not getting any creative destruction, which leads to the real miracles of capitalism.
No. But I think the other point you made about what we should look at today, as interest rates are going up, and we've had the most rapid, in terms of percentages, we've had the most rapid percentage increase in interest rates ever, following 20 years or arguably more of excessively loose money and interest rates that were below market rates. We know there's going to be a lot of damage. I mean, inevitably there's going to be damage. And your point of looking at companies that are leveraged, I think is critical, and everybody needs to do that. And it applies to all sectors. One of the interesting things to me, I'll just throw a tangent if I may, but you look at the gold mining industry today, that's a capital intensive industry where you would expect debt. You would expect gold mining companies to carry debt. In fact, the XAU, the index of senior gold and silver companies, is actually cash positive today, which I've never seen before in history. But that's just a tangent. But regardless of the industry you're in, we really need to look at every company we own to see, do they have a strong balance sheet? Because it's a balance sheet that's going to allow you to survive.
Yep.
Maybe prosper, maybe not prosper.
I haven't seen anybody say this yet. And I it's scary to be the first one, but I can't tell you how many times I was looking at the mortgage data and I'm like, there's no way the Fannie and Freddie survive because they either own or insure half the mortgages in the United States. And right now, 10% of housing is empty. there's no way they survive. And I was the only one saying it. And that's a little scary, especially when the Treasury Secretary comes out and says they're well capitalized. And I'm like, that's not possibly true.
Yeah.
So I will tell you guys this, and I haven't heard anybody say this yet, but what we're about to go through in America, and then I'm going to say the next 3 to 4 years, is going to be known from here forward as the Greater Depression in corporate America. Now there's a whole lot of things that can intervene in this. The federal government might decide they'd rather die by inflation than by mass bankruptcy. I can't predict what the government's going to do. And if you had told me back in 2008 that the Federal Reserve was going to print money and buy treasury bonds, I would have thought you're out of your mind. But they had to do it because the result would have been the entire collapse of the global financial system. So in their minds, their back was to the wall. Of course, I would have rather than do that because you get rid of the moral hazard and you start over.
Exactly.
But in this case, guys, we're talking about close to $20 trillion, 20 trillion, close to it, 15 trillion in investment grade and another, 4 or 6 trillion in high yield. And the default rates are going to be unprecedented, like the Great Depression, unprecedented. But in the Great Depression, there was no such thing as high yield bonds. Like the amount of the credit complex, the size of it relative to the economy is so much larger. And nobody's talking about this yet. There's no one saying this, but I think you're going to see unemployment in the United States by 2025 of more than 20%. And that is absolutely, no one says a word about that yet. But if you look at the numbers of zombie companies that are out there and you look at the numbers of people they employ, and then you consider the follow-on effects of all this, Jamie Dimon said, we're heading for a hurricane back in June, and nobody was listening to him. But it is unbelievably bad out there. in the real economy. I'm not talking about banks or investment banks. I'm not talking about crypto. None of that stuff really matters. What matters is the number of people who are employed at your car dealership. They're all going out of business. The number of people who are employed in the commercial real estate sector. They're all going out of business. The number of people who are employed in, just think about the number of people who are involved in development and construction. All these people who are dependent upon credit. Think about, think about how much money, Twitter owes. how are they going to repay whatever that debt number is, 30 billion? There's no way. There is, and you can just go through industry after industry after industry, and virtually how about this? Do you really think that AT&T is ever going to repay the $30 billion that they owe? No chance. No way. The new Discovery Time Warner bailout thing, or private equity thing. No way. And these are really big parts of our economy. The entire media complex that's depending upon direct to consumer, they're all driving each other bankrupt. Nobody can make money billing individual customers. There's no profit in the entire system. Netflix has never made a profit. And look at how much money it owes.
Right.
It's absolutely going to be a wipeout. And no one's just looking at the numbers.
And things like Netflix and other similar types of companies, that's fine when interest rates are basically zero.
Exactly.
And you can borrow money virtually at nothing.
That's the big
and
difference.
Just grow. But once the growth stops, people no longer want to lend you money, and suddenly you have a real problem.
Yep.
And the thing, I think one of the things we need to emphasize, I've talked to some people and they say, well, Adrian, you're just a pessimist. I mean, look, retail sales are doing fine. Retail sales haven't collapsed.
But look at
and I don't give Jerome Powell credit for very much, but he was right to emphasize, or the Fed was right to emphasize at the last meeting, that monetary policy has long and variable lags. And we have not even begun to see, I don't think, we've not even begun to see the negative impact of what they've already done. So even if they
contemplate doing more without even seeing the effects.
Again, look at the numbers. The last time the Fed hiked rates in the mid 2000s to slow the economy down, to slow commodity prices down, the federal government owed less than $10 trillion. Today it owes 31 trillion.
Yep.
Last time they tried this, the total debt in the economy of all types was around 30 trillion. Today it's 91 trillion. Think about what the impact of an inverted yield curve is going to have on $91 trillion worth of debt, as it all has to get refinanced over the next 4 to 6 years. It's the scope of the calamity. There is no precedent for it. There's nothing in American history. We've never owed so much. We've never had worse collateral. We've never also had concurrently a bankrupt corporate sector, a bankrupt consumer, and a bankrupt federal government. There's been nothing like this ever before. And by the way, it's all, I know I sound like a crazy person, but it's all in the numbers.
Sure.
Everyone has access to the numbers I have, but no one is doing the math. No one's trying to calculate, how's the federal government going to afford its own debt at 6%? It can't.
You can't do it. Yeah.
Not even close.
It can't even get close to inflation
No.
with the debt that's hanging around its neck. Volcker didn't have this problem in the 70s and the 80s.
By the way, today, one last thing, Adrian. Today, 20% of the Russell 2000 cannot afford the interest payments on their debt. 20%. And that's at rates that are like below 4%, right? Current refinancing on all these companies is going to be over 10, probably over 12. They're not just bankrupt. There's going to be no recovery. There's nothing left.
Sure. Well, I was going to ask you, how do you think this is going to resolve? Is the Fed going to just keep on going till they push us into a deep recession? Are we just going to go back and print money to try to paper over it?
Well, I can't answer that question because it asked me to look into the future. And the only thing that I really can't predict is the future. I can't. But I can just tell you that what I think, if you read history, what I think is going to happen is that they're going to inadvertently push us into a severe recession. And the people who have the right political connections are going to get bailed out. That's what's going to happen.
Right.
And you see it already. Look at Carvana. Who's taking over Carvana? Apollo. What's Apollo? A very well-connected private equity firm. So once again, mom and pop, the real entrepreneurs in the country, are going to be completely screwed. And everyone like Carlyle and Apollo and Blackstone, they're all going to get the best assets, and everybody else is going to get destroyed. And the wealth gap is going to increase. The middle class is going to get crushed. And at some point, it's going to get bad enough so that the American people foolishly vote for more socialism. They want more government help, like they did in Great Depression. So there's going to be some kind of either, I would suspect, a fiscal, not a monetary bailout. And it's going to be horrendous. It's going to push America further and further towards total government domination.
It sounds exactly like the wrong solution. Going back to Thatcher, I think we've already run out of other people's money, so socialism isn't going to be so great anymore. Cindy had asked, just to follow up on Apollo, that basically since Apollo is the owner of Carvana or whatever with all this debt, is Apollo going to get hurt as well, is her question.
No, Apollo is very savvy. They're not, they do own some of the common stock, but just enough to have an interest. They have been lending them money. And so what happens in bankruptcy is all of Carvana's assets will be auctioned off and the proceeds will be given to Carvana. And the proceeds will be given to Apollo because that's the major debt holder. And so what will really happen is Apollo will control the bankruptcy proceedings and Carvana will be recapitalized with a mixture of the old debt and new equity. And Apollo will end up in control of it. That's what's going to happen. And you call that kind of thing lending to own, and it goes on all the time in America, especially in the years before recession. And the private equity firms are masters at it. They're very good at it. And I'll give you guys a wonderful tip. I'm only doing this because I really care about you guys, and I'm grateful for the help you've given me in starting my new company. A lot of people don't know this, but I retired about 3 years ago. I left MarketWise, Stansberry Research. I've retired from my own firm. There's a whole lot of reasons why. I don't need to get into it, but at a certain point, when you've got 600 employees and it's just not the same culture that you created, it's just better for the founder to walk away, which is what I did. And I had hoped that would be, I could just retire and that would be that. But the people who took over my company have not done a very good job running it. And the stock's gone from 17 to 2, and it was time for me to get back to work. So I started a new firm. It's called Porter and Company. And if you want, you can look us up online. And our promotional website is called thebostonblackout.com. And it's about how I suspect there's going to be a severe shortage of energy in New England this winter and what that means for investors. Love for you to watch the documentary. Love for you to see it. But here's a really cool tip, and this is completely free. One of the masters of distressed debt is Carl Icahn. And most people don't know this, but over the last 20 years, Carl Icahn's track record is actually better than Buffett's. And the reason why is because Carl is willing to get involved in more high profile, controversial situations that Buffett doesn't want to get involved in. So Carl will do the sharp elbow kind of stuff that Apollo will do. He will lend to own. He will take a distressed company, he'll give it some money, but they're selling their soul to Uncle Carl, because when they can't pay, he gets everything. The other investors get wiped out. Now, you can cry about that and you can say, well, that's hardly fair. It doesn't seem very charitable. And it's not very charitable. It's tough as nails capitalism. And that's the way money works. You want to borrow my money? Okay. You can't pay me back? Well, then I'm taking everything else. And that's what Carl Icahn does. He's one of the best in the world ever at it. He has a publicly traded vehicle. It's called Icahn Enterprises, and the symbol is IEP. It trades for around $50 a share, and it's basically a publicly traded vehicle of his hedge fund. Now, he does have a private hedge fund, but it has almost all the same positions as the public vehicle. There's a lot of overlap. And what deals go in which vehicle all probably just depends on who's got capital at the time. I don't think that Carl's picking and choosing. But here's the cool part. We're going into this enormous distressed debt cycle. Who do you think is going to win more than Carl Icahn over the next 4 or 5 years? Nobody. He's going to get into all the best deals. He's going to make all the highest returns. He's going to wipe the floor with the amateurs that he's competing against. Nobody knows more about this business than he does. No one's tougher at it than he is. Here's the best part. If you buy the public vehicle, you're going to get paid a $2 quarterly dividend. That equals a 15% annual yield to invest alongside Carl Icahn and a whole bunch of distressed debt deals that are going to come down the pike. I don't know of a better security outside of Berkshire Hathaway for retired investors. There is just no better way. If you're going to be in the capital markets on the equity side, you got to be in Carl Icahn's public vehicle. It's called Icahn Enterprises, and the symbol is IEP.
Does it trade at a discount to NAV, or you know?
I don't know where book is right now on it. I'm sorry, Adrian, I should know that. The cool thing he's doing is he is slow motion taking it private. So every quarter there's a dividend, and you can either have $2 in cash or you can have $2 in stock. And every quarter he takes the stock and he pays the cash to the outside investors. It's a really, really cool thing he's doing. And right now he owns 69% of the common. So you're investing with him.
Yeah, he's a super smart guy. I've owned that before.
Gotcha.
So, Rich, I don't know what you think, but the questions that we were thinking about, I think Porter's already jumped ahead and answered them. So maybe I can ask a question as a follow-on from, not from Carl Icahn, but a follow-on from what you were talking about, your new company, Porter and Co. You've obviously started and run very successful companies, and we think Porter and Company is going to be very successful as well. So how does one, you're a successful investor, you're a successful businessman, how does one inform the other? And more specifically, do you think having the experience of running a business helps you as an investor?
Definitely, yeah. Now, as you run a business, you find out on the inside what really makes the business tick. What are the real fulcrum points? What's the difference at the margin between business model A, business model B, or between product A or product B? And you see how those can have massively different returns. And so when you see somebody like a Disney company, Disney this week, the replacement of the CEO, he walked in there and he changed the structure of Disney, and the whole company fell apart. And all he did was he took the distribution choices away from the content creators and made them a separate entity. And that ruined the culture of the company. And then all they had was infighting, and the whole company fell apart. Well, I've seen that happen at my own firm. So I know that that's something you cannot do. You cannot go in and crucify the power structures inside a business without having very negative effects on the real world returns. So that's the number one thing I can tell you, is that the company culture and the informal way that things get done is very, very important. You have to pay attention to that as an outside investor. And then the second thing I would just tell you is that as a business owner, it's so much easier for me to look and see what accounting really means. I mean, if you guys tried to go and make any sense of the market-wise accounting, you'd be completely lost. It's just, subscription businesses, deferred revenues, revenue recognition schedules. It's all very, very complex as an outsider. But as a business owner, it makes complete sense to me because I've been dealing with it for 25 years. And so when I'm studying something like a software company, anything that has that kind of delayed revenue recognition model, I understand it way better than a typical outsider would. And that plays a big role in the kind of businesses I like to invest in. I love investing in property and casualty insurance companies. And the number one reason why I love investing in them is because nobody else can understand the accounting. It's completely Byzantine.
Well, you are Buffett.
Well, I don't know about that, but I do love that space, and it's a tremendous advantage if you're familiar with real business operations when you're looking at as an outsider at the accounting. And then just one last thing, I would just say that as an investor, I'm a much better business owner as well, because as an investor, I'm really focused on what cash is available to distribute to shareholders. And as a business owner, I can't tell you how many times people have brought me business propositions that can produce a lot of profit, but require enormous amounts of capital. And there are a lot of business deals that if you really measured the actual cost of capital, you would know from the very beginning, there was no way they're going to make that cost of capital back. And I would point to a lot of the mining deals I've seen over the years, where it's just very unlikely they're ever going to earn back their cost of capital. So that's made me very leery of capital intensive businesses.
So if I could jump here, one of the businesses you do like, especially in the energy sector, are these royalty companies. And I know, Adrian, I'm a big fan. I know you're a big fan as well. You want to talk a little bit about that?
Yeah, and Adrian, I'm sure this is right in your bailiwick. I mean, I got to be friends with T. Boone Pickens later in his life and had the good fortune of being a guest at his ranch a couple of times. And I'm not quite sure why we hit it off so much. I think because we both speak our minds so openly. But he was a great mentor to me, and he of course invented the modern day royalty trust through the Mesa Royalty Trust, which still exists today. And it was a great idea. It was for tax reasons, he wanted to separate all the costs of the business from all the cash flows of the business, and it was a brilliant idea. And so he could take all of the tax benefits, keep them in the operating company, offset all the capital costs, and then have this streaming company that was just paying royalties that were essentially tax-free directly to investors. Brilliant idea, and has worked very well in lots of different industries. And I look for that model in every industry. It's one of the reasons why I've been such a long-term investor in McDonald's. Most people don't know McDonald's doesn't sell hamburgers. They sell franchises.
Right.
And they get paid 7% of everything you buy at a McDonald's. And there's very few businesses in the world that are that good. So I love that model. And in the Permian Basin in particular, you've got the Texas Pacific Land Trust, which is a royalty holder. You've got, sorry, I don't know how to turn that dang sound off on my computer.
Doesn't bother me.
I will try. Let's see here. Turn, do not disturb. There we go. That should do it. You've got the Texas Pacific Land Trust, which if you guys look at that stock, I want you to realize that me and Steve Sugar recommended that stock in 2005 at about $20 a share. And we wrote a report that explained that the share price was going to go to infinity because the oil resources there were going to eventually be exploited, and they didn't have any overhead costs because it's just a royalty company. And all they were doing was using all the cash flow to buy back all the stock. Well, if your revenues are going up every year and your share count's going down every year, then sooner or later your share price goes to infinity. And man, we got such grief. This one stock guy actually wrote a short, recommended shorting it and called us idiots. Well, that was at $20 a share, and go look at the stock price today and tell me who's the idiot. So you can really do well in these royalty companies if you can figure out the accounting behind them and know when to buy them. And the one we've been recommending recently is the Diamondback Energy Royalty Trust, and the symbol of that is FANG. So you can it's called the Viper Trust, and it's a great royalty trust.
Yeah, I'm a big fan of that model, and not only because of the tax benefit, but even if they don't have a tax benefit, it just reduces your risk. If a royalty company starts off with a good balance sheet, like Franco-Nevada, Wheaton, Cisco, all Royal Gold, all of those royalty companies, royalty and streaming companies, the Canadians don't really have a tax benefit for US people, but they're still just wonderful, wonderful businesses. And when you think about, you mentioned culture of a business, that is so critical if you're a long-term investor, not just a short-term trader. Franco-Nevada was the first gold royalty company back in 1985. They almost stumbled, and of course they copied the established model in the oil and gas sector. But you talk about a company that has a strong culture and has not changed that culture for 40 years. The CEOs have come and gone, not too many of them actually, but the CEOs have come and gone, but the culture remains. Nestle is another company that, to me has a very strong culture. And then contrary to that, I remember Hong Kong Shanghai Bank. I own that. It was the very first stock I bought before I wrote a newsletter or anything. And I bought it because of the very, very strong culture of that business. And one of the things they always did was promote people internally. So in fact, one of their CEOs actually started out in the mailroom. But, after 40 years in the business, you imbibe the culture, and unfortunately, the culture of that company changed when they thought they had to compete with US investment banks, which was a huge mistake. And they didn't know what they were doing, in my view. And, I'm not sure that it's a particularly good investment today, but it's certainly not a long-term buy and hold today.
The best example of that is Who was the first CEO ever at Merrill Lynch who did not start out at Merrill Lynch as a retail broker? And the answer is Stanley O'Neill. He was the only outsider who ever ran Merrill Lynch. And his tenure lasted about, 2003 to 2008, 5 years, and he bankrupted the company.
Yep.
He did not understand the culture at all.
Yeah, that's a bit of a problem.
Right.
There's a whole bunch of questions stacking up here and
Yeah,
they kind of walk us down a path. So I'm gonna kind of mention them all. I'll throw in a few comments and I'll open it up to you guys to comment. The first one is, if the government chose the inflationary solution, will inflation peak in 2023, or can peak inflation be pushed out for a while longer? The next question is, will the next crisis be a sovereign debt implosion or a corporate debt implosion? I think Porter's already touched on this. It's going to be an everything debt implosion. Do you think there will be a huge social unrest? And then the last one is, and this is the most important, I think, of the four, where do I put my money to protect ourselves? So I'll just throw out, on the inflation question, governments are always going to choose inflation over deflation. Deflation is painful now. I'm with you, Porter. I think the best thing they could do is take the medicine and move on. Capitalism, free markets, they have a way of getting rid of the dead wood if you let them. If you interfere, tinker, do this, that, the other, they don't function like they should. The problem just gets kicked forward and forward, and it grows and grows for the future until it's too big to kick, I'm thinking. And if you would just deal with the issues, let the bad players go out of business, and let them be replaced by good people with good ideas and good businesses, this will sort itself out much quicker and less painfully. But governments don't like that. They don't like people to be in pain, because people in pain don't vote for them again, right? It's the economy, stupid.
No one's going to give political donations for them to leave everything alone.
Exactly. So, I think they're going to opt for inflation. I wouldn't want to be Jerome Powell. I mean, at this point, it is so far gone. He can't get himself out of this corner. He can't raise interest rates high enough to tackle inflation. And by pausing and pivoting, he's just going to exacerbate the problem further for the future. So I don't think there is a solution that doesn't end in some sort of default.
I'm gonna answer the questions that not directly but indirectly through the last questions. What should I do with my money? And what I'm going to say is probably going to sound a little controversial because it's a little bit counterintuitive. But I think as long as energy prices continue to decline, it is a sign that we are heading into a really bad global recession. And so what I would do is I would buy the US long bond. I would buy TLT. I would buy the longest dated paper I can that's sovereign and it's US. And I'm saying that because I'm a US based person. But I think you're going to see an enormous rally in the long bond as it becomes clear that the US economy is really rolling over along with the world economy. This is, again, please understand, I'm saying as long as energy prices continue to decline, energy prices are down about 10% in the last 12 days. As long as they do not reverse course and make a new important high, I'm long almost completely sovereign debt. Now, why? I know they're going to eventually print. I know they're going to choose inflation. I know that. But they're not going to do that until there is a real crisis. And I don't think you're going to see crisis levels of bankruptcy or unemployment for at least a year, and maybe not for 18 months. There's going to be a long period of rolling over. And my advice to you is until we get to a real crisis, until you can see unemployment, at 6%, at 7%, at 8%, you're just going to see a slowing economy. And that's the time to own the long bond. And that's the time to avoid energy. Now, let me be really clear about this. My whole report, the Boston Blackout, is about buying energy. And you should use this recession to load up. These energy trades I'm recommending are 8 and 10 year trades. They're not short term, and you want to buy them when nobody else wants it. That's when you want to buy it. So go long the long bond for now. Avoid most equity. Start nibbling at the highest quality natural gas resources you can find. Nibbling. And the other thing that if you're sophisticated enough, I would recommend doing is keeping an eye out for good distressed debt. There are companies that are going to avoid bankruptcy, whose bonds are going to become distressed. And I've made my very best investments have always been in distressed debt. And I'm going to launch a new distressed debt advisory next year as the distressed debt grows. So there would be a lot of opportunities, but in the meantime, I would park 80% of my capital in the long bond, and I would just watch as the economic numbers continue to get worse and worse and worse and worse. And you're going to see TLT go up 50% in the next 12 months.
There's a lot to ask you about there. One of the things I'm a little worried about distressed debt is that a lot of people who really don't understand accounting, really don't understand what they're doing, will be what I call knee-jerk contrarians. They'll see something way down, a name they know, and say, let's buy it.
No, and you don't ever want to buy the equity in a distressed situation. No,
of course not. No.
You don't ever buy distressed debt unless you have a really good attorney who's read every page of the 700-page debenture, and you know exactly where you are in the capital stack. There's a whole bunch of due diligence you have to do. It is not for amateurs. And I, of course, am going to hire a real team of experienced people, and I'll have really good work, and you can trust what we do. But I would not recommend trying to do it yourself.
Okay, no, I agree with that. Second thing, if I may, you didn't mention gold.
Yeah, I did not mention gold.
So can you be controversial and tell us why?
Yes. So I think.
Hang on, Porter. Let me put you on mute for a second. Go ahead. No.
I think Rich can vouch for me that I have bought gold and that I have never sold any gold. At least, I mean, I'm telling you honestly, I've never sold a single ounce of gold. And if I did sell it, it would have been through Rich, so he would know. But I own, I don't know, roughly $1 million in gold, and I'm very happy to hold it. But I'm on the Bitcoin side of the fence. I think that Bitcoin is digital energy. And I think that energy, as the world economy continues to grow after this next Great Depression, is going to be very, very, very valuable. And I don't see it as replacing gold, but it's for me, I think it's just the better choice. I'm sorry to say. I do own a lot of gold, and I'm not selling any of it.
Yeah, I like them both.
That's the best I can do for you.
We just came from a conference, Porter, in Vegas with Joel Nagel and Mike Cobb and those guys. And, there's pretty strong arguments made for the hardness of Bitcoin, if you will. And, basically how much there is and how much is coming online in the future. And for Bitcoin, that's an ever decreasing number, and it gets harder and harder over time. A lot of people have a tough time with Bitcoin.
By the way, same exact thing is true with gold. Gold gets harder over time too. It gets harder to find, gets harder to mine, requires more energy.
Low-hanging fruit's been picked.
But gold is also definitely a form of energy and a form of wealth. There's no question.
Yeah.
I can't put gold on my zip drive and take it to anywhere in the world I want to go.
Yeah. So the point I was going to make, though, is, I think a lot of people, when you have things like exchanges, blowing up and, can't pay people out, and, FTX news over the past week, everybody, goes, ballistic, and they say, that's it, Bitcoin's done. Bitcoin's not done. The exchanges have problems, right? The inherent currency is doing just fine.
You guys have seen plenty of fraud over the years in the gold mining sector, of course, right? That doesn't mean that gold is fraudulent.
Exactly. And that's my point. So, I believe you still ought to have both. I think right now, Bitcoin's still very much a speculation. I don't think it will always be, but the price is acting like that. It's starting to settle down a little bit, maybe here at the 20,000 level. But it's been acting like a speculation, and that's how I treat it until it's treated differently. So.
Adrian, what do you think about Bitcoin? I haven't ever heard your opinion about it.
Well, I was just going to say, Thomas More, remember his famous words, silence betokens consent. So I feel I have to jump in here. We don't really want to spend all night on Bitcoin.
Sure.
But I am.
But it was a question.
I'm on the extreme side of anti. Basically, I think Bitcoin and other cryptos, and we're not talking about the scams, and we're not necessarily even talking about the exchanges, but at base, you've got some very clever people with very clever plans, and Bitcoin, has a way of limiting the amount of new coins that are produced, and so on and so on and so forth. But at base, there's nothing there. It's just a creation, in my view. It's just a creation out of thin air. That's not true of gold. Gold has real value. It has been recognized as having real value for millennia, as we know. And Bitcoin is just an artificial, to me, it's just an artificial creation with nothing backing it.
Yeah,
Now, it has uses.
I love it.
Uses.
I love it. I love it when people say that, because as you guys know enough about monetary theory to know that what you want for your money is to have no utility behind it. If, that's why silver isn't gold. Silver has real industrial utility, so it's not a very good form of money. But the reason why gold is such a great form of money is because it has no utility. And gold is exactly what you just said. It's just a thing created. It has no purpose. That's why it's a good money. But it takes a hell of a lot of energy and work and capital to get gold. And it takes a hell of a lot of energy and capital and work to get Bitcoin. It's really very, very similar. In fact, if you read the Bitcoin protocols, and I, of course, have read it a lot, it was actually completely built to model the economic development of gold mines. That's why it gets harder to mine, just like gold does.
Right, but the big difference to me is that someone else, anyone in fact, can create their own crypto coin and start creating that and start marketing that. You can't create an alternative to gold very easily, or at all, in fact. So we've got all these different crypto coins. There was a wonderful article on
There's only 18,000 of them.
Sorry?
There's not many. There's only 18,000 of them.
You guys, all the other, in my opinion, all the other crypto stuff is complete garbage. It's just ridiculous.
I agree with you. There's 18,000 cryptos out there. And, at the conference, I was talking with Erica, and I was like, to me, there's only two that matter at all. And I could be wrong. I'm not a crypto guy. I'm a gold guy, but Bitcoin and Ethereum. Ethereum for the smart contracts, Bitcoin, it's the founder.
Yeah. Well, let's move on, because I think we've all said our piece about it. We all have our views. And the one thing I can't tell you is whether or not the current price of gold is a good buy or not. I really don't know. I'm just guessing. And the same thing with Bitcoin. I can tell you that right now it's trading at about its cost to mine. And so that, to me, that's always been a buy signal. And that's when I've always tried to buy some. And I do the same thing with gold. If you're buying gold at below its average cost of production, you're usually doing pretty well over time.
So a couple more questions, and I'll handle one and hand the other one off to Adrian. The first one is, well, first off, yes, Tony, there will be a recording available. So if you're here tonight, or even for those that couldn't tune in, you lost the ability to ask a live question, but tomorrow, pending, the world stop turning, whatever, we're going to go ahead and put this in your inbox. So you're going to have the full recording with the Q&A tomorrow, everybody that registered for this event. So thank you, Tony, for bringing that up. Somebody asked, where is it? Are we going to have a government digital currency? Do you think the government will put us into a digital currency? I think China's taking the lead because it's all about control, and that's all China's about. I think the US sees those options as positive, as do most other governments, but do not confuse this. This is not a decentralized cryptocurrency. No. What it is a more efficient delivery mechanism for the same crappy fiat currency we have right now. Okay, they just find a better way, a more efficient way to get it into the system so that they can force feed us everything they want. They can, if we're not spending money fast enough, they can take it back from us. They can impose, negative interest rates. Whatever the case, it is the total government control of your spending. It is the total loss of all privacy when it comes to your financial affairs. You should fight this at all costs.
I like fighting losing battles. That's been something I've done my entire life. And I think you're absolutely right. If a store has a sign up saying we don't take cash, you need to go in and tell them that I'm not giving you my business. Don't just walk by, tell them you are not getting my business because you don't take cash. And so on. And we need to use cash more and more, as much as we can, to sort of delay the absolute control of digital government.
I'm not I want to be very careful here and not be accused of inciting violence, but I'm really curious to see where America is in another 5 or 10 years, when the validity of elections has come under question and there is a very deep-seated distrust of any kind of government intervention in electronic records. And with what's going on with forcing people to take a vaccine that may now be causing serious heart trouble in people. And by the way, I'm one of them. I had a heart attack in June that I feel very, very confident was related to the COVID vaccine. Now, of course, I'm not a doctor.
You're not the first I've heard that from
you
Porter.
can say this is crazy, but so many people, you know, I run 3 or 5 miles a day. I've always been very, very healthy and fit. Why did I have a heart attack out of the middle of nowhere? It makes no sense. It makes no sense at all. And of course, I think it's related to the vaccine, but who knows? My point is that it used to be just fringe people like us who were very distrustful of the government, but it seems like that segment of the population is growing.
Sure.
And what I'm really curious to see is, at what point do Americans start blowing up things like speed cameras and you know, and really taking action to prevent the growth of the surveillance state, which has become all encompassing? And I don't know that it'll happen. I'm not, please don't blame me when it does. I'm not saying you should go do that. I just think that, you know, Americans, I'd be surprised if the kind of rednecks that I know from South Florida put up with that shit for much longer. Pardon my French.
Yeah. No, I agree with you. And frankly, I said to a lot of my friends in England, I was just very surprised that Americans put up with so many restrictions during COVID. That actually surprised me. I didn't
really
think
surprised me
Americans
too.
would
I found it shocking. I was reminded of the Doug Casey line about watching them roll over on their backs and wet themselves, you know.
But I think there has to be a limit. There has to be a limit. And I think, you know, to some extent, COVID came so quickly, we don't want to rehash the whole thing, but it sort of came quickly, and it was felt that you had to have a response. And when people are talking about I mean, crazy stuff like the worst epidemic since the Black Death, which is just, what some people said worse than the Black Death, which is just nonsense. When you think the Black Death wiped out.
That, by the way, I'm blaming you for that. That came from England. That research.
The Black Death?
No, that guy, there was the guy at the college in England who was writing all those papers.
Well, his name is Neil Ferguson, not to be confused with the other Neil Ferguson.
Yeah.
Which is a kind of unfortunate to have a name the same. But yeah, I mean, that was just absolute total nonsense. But I guess what happened was it came quickly, and so people were understandably a little bit worried. But I think they've learned their lesson. I hope they've learned their lesson. And I agree with you.
I'm not going to agree that they did. I'll say this, you know, first off, the one thing I thought that set Americans apart was the fact that we questioned authority. And I think it's one of the best qualities of Americans over the years. And it's not something new. I mean, correct me if I'm, you know, if I get it wrong, but I think it was either Thomas or Jefferson or Franklin that said the government should be fearful of its people, not the other way around, something along those lines. I paraphrased. And I think it's one of the things that sets us apart. And I'm surprised how much we have rolled over on all these different things. It's not good. And at some point, which I think we should have passed probably long ago, it's going to be too much, and we're going to start hearing people's voices some more. The biggest issue I see, and it came out in the conference from a lot of people, we had people from all over the world there, and I heard this over and over again, and I tend to agree. What are we missing in this world right now? And why are we doing these silly things and reacting? And you know, we're missing real leaders. Find me one. Find me one, and you'll navigate these issues a lot more easily if you have somebody you can trust that doesn't panic and go down the wrong road just because they feel like they have to do something.
No, that's a really good point. You look at, you know, after the Second World War, you had Adenauer, Churchill, Truman, de Gaulle. You know, you can call de Gaulle cranky, which he was, of course, but all of these people were real, genuine leaders that people would look up to. You wouldn't have to agree with them, but you could look up to them.
I'm not so sure if I was an English guy, I'd be that big of a fan of Churchill. Seems like he kind of oversaw the destruction of the entire empire in one lifetime.
Well, wait a minute. That's another whole topic for maybe another
He's very witty,
discussion.
though.
I don't really.
That's a new revenue. That's another revenue.
I'm not trying to start a fight.
No, we'll have to pass that. But what I'm saying is, these are people that you could respect as leaders.
I hear you loud and clear. But what about Governor DeSantis in Florida? Florida was the only state in the United States that I could go to during COVID where I would be treated like a human being. And he was, of course, everyone said he was going to result in all of these deaths and all this nonsense. And Florida was the only economy that really acted normally throughout the entire affair. In fact, I remember being in Miami. I'm at my house in Miami Beach tonight. I remember being in Miami for New Year's between 20 and 21. And I went to a party at the SLS Hotel with 5,000 people, and there wasn't anyone wearing a mask. And I was like, oh God, thank goodness. And then someone said jokingly, yeah, COVID doesn't exist in Miami. And I'm like, wonderful, like I'm willing to take my health at risk. That's fine. I'm making my own decisions. But that's just, I think DeSantis did the best job.
Yeah, I guess it wasn't fair to say there are no leaders. There are some, but the world is not being run by them in general. Look across the globe. I think we're hurting for leadership.
Well, I heard today that Maxine Waters is going to oversee the congressional investigation of FTX. I'm sure she'll get right to the bottom of it.
Oh, wow. Well, that's good.
All right, so as not to get political, let's see if we can move on here. Here's a good question. What industries do you all three like in the next 3 to 5 years?
Oh, that's a good one. I'll go first. I like the restructuring industry. You're going to see massive amounts of corporate restructuring, and there's a really good firm in Southern California called Houlihan Lokey that flies below the radar. Nobody knows what this firm is. They stay out of the press, but they're the company that the best companies go to get restructured. Bunch of lawyers and accountants. It's the symbol is HLI, pays like a 2% dividend. It trades at 17 times earnings, reasonably priced stock. It's going to have a great future the next 4 to 6 years without question. Another one, this is going to be controversial, but I really like the home building sector. And there's one, because it contains a stock called NVR. And I'm not going to go into everything about NVR, but it's the only capital efficient home building company. It has like a 30% return on assets. It blows every other home builder out of the water. It's an incredible stock. Look at the chart for yourself. And I know there's going to be a collapse in home building over the next 12 months because of interest rates. I know that. I just don't believe the interest rates are going to stand. So what I want to do is I want to wait for the worst possible quarter in home building that I'm going to see in the next 20 years. And I'm going to buy NVR hand over fist. And you get a chance to buy this stock once every 10 years or so, you should take it. So
is the balance sheet good?
Balance sheet's great. They've never had any debt. How about this? Throughout the entire period between 2008 and 2010, they didn't have a single quarter where they didn't make cash. It's a phenomenal business. One of the best run businesses in the United States, just phenomenal. And all they do is buy back stock. So the whole time the stock price goes down, they're going to be buying back stock out the wazoo. It's a great business. And so restructuring, home building, and then what else could I say? Oh, I know, energy. Absolutely, natural gas. I'm pretty sure you're going to see natural gas be stronger than oil during this recessionary period, but you are going to see these stocks trade off. And natural gas is a volatile commodity. So you're going to see these stocks trade off 50%. And that doesn't mean I'm wrong. It just means it's time to buy.
Adrian?
Can you give us a few names on some of the natural gas energy stocks you like?
I would love to, but then I would go out of business because that's what I'm using right now to sell my new newsletter.
I was just going to say,
Okay.
So this is a great point. One of the questions here is, could you repeat Porter's Boston URL again? It is the THE BostonBlackout.com. And there you stick around, you listen to the narrative, which is worth listening to. You get to the end, you'll see how you can get exactly what Adrian just asked for.
Yeah, there's two stocks, Adrian, that you could find very easily on your own. And I'm sure the listeners can too. It's the leader in the Marcellus, which is not hard to find. And then there's a company that's on the Gulf Coast that's building the first vertically integrated from the wells in the Haynesville to its own pipeline to a new LNG facility on the Gulf Coast. It's already all been permitted and construction is underway. And that stock is still only around $2. And the market cap on it is like $2.5 billion. That's going to be $100 billion business in a decade. It's if you have the patience to be an actual investor, this is the most important energy infrastructure that's being built anywhere in the world. And it's in America. And it's going to be an incredible facility, incredible story.
Adrian, do you have some thoughts here?
First of all, I like gold. in the environment we're in, I think we're heading into a stagflation or worse, which will be a depressionary inflation, or whatever you want to call that, deflation or something. But I think gold will perform well in that sort of environment. I also like the commodities where there are supply constraints. Obviously, anytime you look at anything, there's supply and demand. But I like the commodities where there are supply constraints as well as potential increases in demand. So that would be oil and gas. I like oil as well as gas. Copper, but those would be the primary ones, and uranium, but to me, uranium a little bit later. I think we're going to see good opportunities, not in any particular industry, in a diverse group of industries. I'm really a bottom-up investor, but in the smaller markets, the smaller overseas markets, the smaller overseas markets tend to do well in stagflationary periods, particularly if the dollar, we haven't talked about the dollar, but particularly if the dollar is declining. So if we have inflation and we have a declining dollar, some of the smaller markets, which have grossly underperformed over the last 5 and 10 years, I think should, if history is a guide, outperform the developed markets. But there's not any particular industry. It's really a matter of looking at specific companies, that have good balance sheets and stand to benefit from that kind of environment.
Gotcha.
That reminds me of something. Can I give you guys a little fun brain teaser?
Sure.
So, Adrian, this is not a joke. Okay, this is not a joke. It's not a gotcha thing. This is actually fact. Did you know in the United States there are currently 82 fully functioning, active today nuclear plants that are run in utter secrecy by the federal government?
No, I didn't.
It's true.
I will shut up. I know the answer because I was in Vegas. So,
and this is absolutely the truth. And the other thing is, these things are not only very powerful, they have a great safety record. Many of them have been operated for decades. There's never been an accident involved where a human life was ever lost. And here's the best part. They're portable. We can actually send them to Europe in less than a week and plug in the entire power grid to Europe. I'm talking, of course, about our entire nuclear navy, which is 82 ships that have nuclear reactors built onto them. The point of the story is, there is nothing that technology-wise that's constraining us from building a safe nuclear power plant in every county in this country. If you can build a safe nuclear power plant on a warship, you can definitely build a safe nuclear power plant in a city. There's no question. Only thing remains is the political will to do so.
Exactly.
Oh.
Good point. So from my standpoint, I'm not going to give you any stock picks or anything like that, but I look at the environment we're in. I agree with Adrian. I think we're either in or heading to stagflation. To me, that's an environment where, basically every asset you own is falling in value, where everything you need to survive is going up in price. It's like the worst of all situations. And there, I just think you have to wrap your head around not what you want. All right, because we still haven't really gotten rid of what we want. We're still buying those things. That's why consumer numbers are still strong. We haven't felt the pain yet, but it's coming. And when the pain comes and you have to focus on what you need, that's where I think you ought to be investing. So you're going to be investing, as Porter said, in energy. You're going to invest, as Adrian said, in gold. You're going to invest in agriculture, things of this nature. The stuff you cannot do without is really where I would be focusing.
Lawyers, guns, and money.
Yeah. Maybe we can get rid of one of those. Let me see. Big question here, Porter. I just got to throw it out there. What kind of wine are you drinking? Inquiring minds would like to know.
Thanks for asking. My long time best friend and colleague at Stansberry Research.
Sounds like Doc.
David Eifrig makes a wonderful Cabernet from Sonoma. Highly recommend it. The label is called Eifrig, and this is my favorite vintage. This is a 2014.
Okay. Can you do me a favor? Do you have the bottle there?
I don't. It's in the kitchen.
I was going to say, could you look on the back? Because I can't remember if it's 2013 or 14, but I was one of the early buyers, and he did a nice job. He put me and a bunch of other people on the back of the label there.
I got downgraded.
Did you?
So the first wine he made was in 2009, and he thanked his dad, his brother, and then me. And then every year thereafter, I got further and further down the label.
You got to keep buying, Porter. You got to keep buying.
I own a lot of it.
No, it is fantastic wine. Love Doc to death. He's a great man, in my opinion. A lot of people were offering their advice on different coins to own. I'm going to throw them out there. I can tell you, we make, just so you know, the forums out there. Somebody said Bitcoin, consider buying it while it's depressing. Somebody else said best to hold Bitcoin on a Trezor or some drive, not on an exchange. I'll just offer this word of advice. I go to Erica Gemma for all things crypto. She's one of the brightest minds I've met in that space. And she's got a little phrase, I'm sure she didn't invent it, but it's not your keys, not your coin. So these folks that are losing all their wealth on the exchanges because they don't control it, you control the keys, you control the coin, and you're not going to be subject to those kind of issues. Somebody else said Kinesis, or as a question, Kinesis, will it be hurt by FTX? I don't know. I don't know if anybody on this panel has got that answer. I can try and get it for you though. So just email me, rcheckan@assetstrategies.com. Email me so I know who asked that question, and I'll pose it to Erica and I'll get an answer for you.
Adrian, I know you remember the Russian default in '98. And I remember being so glad at that time in my life. I had never had the brains to invest anything in Russia before. And so, I was one of the people who said, well, I've never lost $1 million in Russia. And I feel the same way about FTX.
What did you invest afterwards?
I've never owned any Russian equity or any Russian debt ever. I'm good friends with Jim Rogers. He told me to stay away from it, and I took his advice.
Yeah. Stay away from countries that don't have a rule of law if you want to protect your capital, I guess. Let me see. This is a good question. I know there's a lot of changes going on, not just for, with Porter and Company. That's obviously the biggest change in the financial newsletter industry of late. But John was asking, what does Porter think about the state of the financial newsletter industry today? Do people still read newsletters, or do they want more content in video form?
A great question. I don't know the answer to it, really. I can tell you that the newsletter industry is on its knees. The revolution of social media has not been good for the newsletter business. Twitter has been devastating to the newsletter business. Hard to get people to pay for content when there's so much good free content on Twitter. But I think eventually everything is worth what you pay for it, and eventually that's going to all sort itself out. But it's been sad to see a lot of people suffer in the newsletter business over the last 5 years.
Yeah, I got to tell you, we work a lot with the newsletter industry, all sorts of, your parent, your old parent, and others. We work with them all and have for decades. It's kind of lately, to me, from the outside, if you remember the Godfather sagas, it feels like it's either a baptism or a wedding. Every time they're in the church celebrating something, everybody's getting whacked. And that's what it seems like what's going on in the newsletter industry right now. And part of it is because the market is going south, and nobody's immune. Nobody can really stop the bleeding in the markets. So
I'll tell you something though.
Yeah.
I really mean this. I watched the newsletter business blow up in 2017, 2018, and 2019. And during the COVID thing,
everybody was an expert, right?
Everyone was an expert, and everyone was abusing their customers. Everyone was. And I thought, this is not gonna end well. And I was there at peak Agora. Agora is one of the largest newsletter companies. Yeah. And they flew all the leaders in the industry on private jets to their ranch down in Nicaragua, Rancho Santana. And I thought, woo, when newsletter writers are traveling on G5s down at Bill's place, this is the top. And everyone there thought they had my number, because they thought that year they were going to finally make more money than Stansberry Research was making, and they were wrong.
The only thing missing, Porter, was the picture of all those jets on the cover of Money Magazine, right?
That's it. Yeah, so, and I'd say half of that room is now out of business and bankrupt, and Stansberry Research is doing just fine.
So that's where I wanted to go
But
to
my
next.
point is if you treat your customers right, if you do honest work, if you do thorough work, if you do the work that everyone should do before they make an investment, but nobody ever does, if you do that work for people, then people are still willing to pay you for it. But everyone else who is faking it, everyone else who claimed that they were doing due diligence and weren't, they're all out of business.
And this is exactly where I want to go with this right now. You have a mission for Porter and Company, and it's one of the reasons that we wanted you on the show. And, I think when Aaron reached out to us and said, hey, do you want to do something? Or Kim Iskin reached out as well. Basically, I said, listen, whatever we can do, to help, the world is better with Porter in it, because I saw the things that you did, 2015, 10 years ago. And I just think we're better off if you have those insights. So can you share your mission with Porter and Company and what makes you different from all these other folks that are, getting whacked during the christenings?
It's really simple. I mean, I just said it, I love doing financial research. I love building financial research teams. And the whole thing that we did at Stansberry Research that made us so much different was we innovated this lifetime subscription model where you pay one price and you get everything we do, and we keep making the offering better and better and better. It was really a partnership. We're going to do the research, you pay an annual subscription fee, and we just continue to make the work better and better and better for you. And that symbiosis between genuinely sponsoring a research team, and that's us, that's the relationship I want to have with the customers. Those are the customers I'm looking for. And of course, in anything, it's just very hard to keep that constrained. And when you have business partners who want to grow and they want to acquire other companies and they need the revenue to go up every year, 50% and all that stuff. And that's what happened. And, I'm literally running this business now out of a barn on my farm. I've got 8 of my closest friends who are doing it with me. And we're going to start from scratch, and we're never going to have partners, and we're never going to do acquisitions, and we're never going to do anything but serve hopefully a very small but loyal group of customers. So this is my little hobby horse. It's my little retirement business, and I'm turning 50 this year. I hope to do it for another 25 years, and I know I've gotten a lot better at it than I was 25 years ago. I think I'm pretty sure everyone here would say the same. So I'd love to have your business. If we can help you, let us know. And of course, we always are going to deal with everybody fairly, as you know. So if you're ever unhappy, we'll give you your money back with parts friends.
Real quick, I'm going to shoot through this whole stretch here with Tony. I'm not going to mention your last name, but Tony is in the audience, and he got it right even before you said the nuclear fleet. He misspelled submarine. He laughed out loud, and he said exactly on nuclear once you came out with it. And then he said, regarding the spelling, you better quit drinking your wine. So because he's misspelling submarine, but we won't hold that against you, Tony. Next one is, what advice would you give to someone starting over financially in this environment?
Starting over?
Starting over financially, yeah.
Same advice I give everybody about their finances. You got to earn more than you spend. And you have to invest the difference in high yielding, capital efficient corporations mainly. And of course, you also have to have some things for a rainy day, which is gold and Bitcoin and other things like that, real estate.
Okay. Adrian, anything?
Yeah, same thing, different words. Debt is the killer. Debt is that doesn't mean debt at all times, in all circumstances, is wrong. Most people borrow money to buy a house. I talked about mining being capital intensive. You need to borrow money to build a mine. But for most people, most of the time, I think debt is just an absolute killer. Because when you borrow money, you can always pay it back. Well, not always, but the circumstances are such that you think you can pay it back. But things change. 5 years down the road, you can't.
Yeah. So Peter,
there.
What's that?
Don't ever want to be there. I mean, the things that I have a 15-year-old and an 11-year-old, and I teach my sons a little bit every day about the property and casualty insurance business. I teach them a little bit about capital efficient companies and market timing. And the number one thing I teach them is there's just 2 kinds of people in the world, boys. There's people who pay interest and there's people who collect it.
Yeah.
Which one do you want to be?
It's funny. It's important to pass it on, because let's face it, I don't want to get into a whole nother thing, but they're not learning it in schools. You got to teach your kids. When they have take your kid to school day or take your kid to work day, right? So I took Thomas, my 15-year-old, to work. This is several years ago. And, I think for most kids, it's just a day out of school. They get a day off. But Thomas had to come here and he had to do some work. I put him to work. He was in a school environment at ASI. And I had him do a little report on, I had him read, the tale of the tales, how we got into the business of precious metals through the Vietnamese, refugee crisis, and how that was an epiphany to Glenn and Michael. I had him read that, and I had him explain to me, he's like 8 years old, how gold was money and why it was so important.
When he got it wrong, you made him say it again.
Exactly. So no, it's important. You got to teach these things. They're not going to learn it on their own. They're going to learn it the same way they learn all the other wrong things in life.
I want to just say one more thing about that. I think people hear me say, "Oh, you have to, earn more than you have to produce more than you consume, and you have to save the difference." I hear this all the time. Well, it's easy for you to say. You live in a house in Miami Beach and you fly on a private plane and blah blah blah. And I'm like, well, yeah, but how do you think I got any of this stuff? Because when I graduated from high school, my dad gave me $800 and said, "Good luck, son." So, the first place I lived in South Florida was on Steve Sugarwood's futon in a $500 a month apartment. I mean, I literally started from nothing. And for 10 years, I didn't have anything. I mean, I was driving a 1983 Honda Accord until one night the police came and confiscated it from my office complex because they thought it had been stolen and stripped. But it was just
that
my
car shouldn't have been there, right?
So if you choose not to spend the money, you can find a way to do it, but you have to choose it first. So I never had a TV, I never had cable, I never had a cell phone. I never spent any of the money because I was investing it all because I wanted to be rich. And there's no other way to do it.
You could ask my wife, Helen, when I moved up here to take this job. So I was in the military. I got out. I did some direct sales in Atlanta, Macon, Georgia, for a while. And then Michael reached out and said, we're looking to expand. This is back in '96. And I came up here and I really didn't have much because I didn't have an exit plan. I just knew I was going to start my new career. I didn't know what the hell it was. And, but I started working for Glenn and Michael and they paid me what I was worth, which was basically nothing back then. And, I ate a lot of mac and cheese. I didn't go out. I read about Swiss annuities and central bank gold.
Yep, exactly.
The exciting life.
Yeah.
And, you do what you have to do. But my wife can tell you because we were housemates. We were both renting from the same guy who was trying to hold on to his house in a divorce. And, she would ask me to go out, with her and her friends. And I'm like, it's okay. I'll stay here and eat my mac and cheese and read about central banks. So she can attest to it. You do what you have to do, but it's important to do the work. So,
yeah. If it was easy, everybody would do it.
Exactly. So, Tony, yes, glad to see Porter's back. Was worried about that. And then Paulette came in and said, what is the difference between Stansberry Research and Porter and Company? And I'll hand it over to you, Porter, but bottom line is Stansberry Research isn't even Stansberry Research. It's MarketWise now. Porter is not involved editorially, et cetera. He is very much involved in Porter and Company. If you want that same hard-hitting, financial analysis, Porter and Company is the place to go. The BostonBlackout.com. Anything you want to add to that?
No, I sold Stansberry Research. I sold Stansberry Research to a group of investors and left the company in December of 2020. And I started Porter and Company in June of 2022. And it's just me and a couple of handpicked analysts and a couple of old friends. And I'm writing weekly, publish every Friday, and would certainly love to have your business.
All right, there's a lot of questions here. I don't know how long you guys can stay. I usually try to stick around till they're done. They are coming hot and heavy. Let me see. Why is no one concerned about the pending diesel fuel shortage?
I'm very concerned about it.
Elaborate.
Well, the whole world stops without diesel.
Yeah.
And if you make it essentially a crime to be a fossil fuel producer, we're going to run out of diesel very quickly. But that problem can be cured just by suspending the Jones Act, which I suspect that they will eventually do.
All right.
I'll jump in on the Jones Act because I live in Puerto Rico. Puerto Rico, that's really to the detriment of places like Puerto Rico. And I don't know if we talked about this privately, Rich, at some point, but during the last hurricane, British Petroleum, BP actually had a ship off the coast of Puerto Rico loaded with diesel. There was no power on the island, but they couldn't dock and unload. It took 10 days before Biden gave an exception for that one ship. It's criminal. It's evil.
Gotcha. Yeah, we can go in a whole other webinar on that as well. Cindy asked, getting back to the LNG, is it worth it to get into the company that owns the boats carrying the LNG with contracts out for 3 to 5 years? FLNG Flex.
That's I can't say it's not worth it. I can just say that I haven't spent a lot of time studying that, because that is a very low margin, very capital intensive business. And I'd much rather capture the spread of taking the energy out of the ground than try to capture the infinitesimal spread of being in the shipping business.
And the ones I've looked at recently are not inexpensive. The stocks, I mean, are not inexpensive.
And by the way, they all eventually go bankrupt, don't they? They all eventually go bankrupt.
All right, Leslie, will production / the sale of EVs really be as large as expounded, given the shortage of the minerals that go into them, and thus will natural gas not be as important? And then she just says, great investigation into the issue regarding New England, EU, and USA concerning energy. So she's already watched the Boston blackout.
Yeah, well, I would tell you that there's going to be a tremendous growth in natural gas for electricity, whether there's EV cars or not. And I do think that EV cars are going to continue to expand, but obviously not at a pace that outstrips the mineral production. For me, that's a reason to be bullish on mineral production, not a reason to be bearish on natural gas.
Good point. Good point.
No, I agree with that. I will say that some of the projections and talking about, doing away with internal combustion engines by 2030 is just nonsense. It's just not going to happen.
And by the way, please don't put me in that camp. I'm not saying that. I'm just saying that there's going to be, there's going to be a material increase in electric cars every year for a long time. Material increase is reasonable amounts of growth. It could be 15% more cars every year. And that's going to happen. And the reason why is consumer choice. And eventually the prices are going to come down to where they're very competitive with internal combustion engine cars. And because they have lower maintenance costs, they're going to be the choice.
No, and I don't disagree with that. But the questioner raises a really good point. You look at an EV car takes 5 times as much copper as an internal combustion engine. You look at solar panels, but we all know use a lot of silver.
Yeah.
You look at windmills that take both copper and steel, and they don't last. What's the average life of one of those offshore turbines? 10 years, 12 years? So they have to be replaced. We simply do not have the copper. We simply cannot produce the copper to meet the projections for EVs and green energy. So I'm not disagreeing with Porter. I'm just saying those projections simply, we cannot do it. We cannot produce that much copper.
Gotcha.
I do, and I've already written this in my newsletter. You'll find it if you become a subscriber and look at the back issues. I've actually recommended a copper streaming company, and I think that copper is going to be one of the best performing assets of the next decade.
Yeah, I agree with that, 100%.
All right, just a comment from Kevin. He says, thank you, gentlemen, not a question. But he has said previously, true Americans do not tolerate tyranny. So I guess when we realize that we're under tyrants, that's when we start fighting back. Gary, for Adrian, what is it going to take to get gold out of its doldrums?
Well, that's a
higher prices, I'm guessing, right?
Yeah, that's a question people love asking. I think gold investors typically expect too much. And I know this is not the answer you want to hear, but if you look at what gold has done this year, gold, I don't have the numbers right now in front of me, but gold is down, what, about 10% this year?
No, worst case, the worst high water mark, it was down about 8-9%. It's only down about 3-4% as we speak.
Okay, and then you look at for the year.
For the year,
I'd take, as a Bitcoin guy, I'd take that.
And then you look at the dollar, which of course is a headwind for gold. And at the peak, that was up 18%.
20 to
at the peak.
Yeah, 20.
Gold has actually held up remarkably well A, in the face of a very strong dollar, B, in the face of a deflation or a collapse in every other asset. And Porter mentioned Bitcoin, but you look at the S&P, you look at the Morgan Stanley, you look at housing prices, et cetera, et cetera, et cetera. Gold has actually held up better than virtually anything else other than oil.
Well, hang on. I would like to point out that my very top pick in the natural gas space, which is the gods of gas, has gone from 22 to 44 this year.
Right. Well, oil and gas have done well. But other than that, gold has really held up pretty well, I would say.
Yeah, I think, you know, I've heard that question all year long. I've tried my best to address it. You know, it always starts with, when is gold going to finally do its job? And my answer is, it's doing its job. You know, this is what you get in a deflationary environment. And people always come back and say, no, inflation, it's inflation for a year and a half. And I'm like, well, retail consumer prices are inflationary, but assets are deflating as the Fed, you know, tightens monetary policy, pulls the punch away from the party. Assets, the bubble is deflating, and gold is part of that. Its job in a deflationary environment is to deflate slower than the rest. It has done that very well.
Well, I think that's an interesting point, if I can. Most people think, if you say gold, most people think gold is a protection against inflation.
And it is.
Well, but
it has a job to do deflationary as well.
Yeah, but here's the point. If you look, we think of gold as an inflation hedge because that's the last time gold did really well in the 1970s. We had inflation, so therefore gold is an inflation hedge. But if you look back throughout history, gold has actually performed, and let me make sure everybody listens to each of the words. Gold has performed better in real terms on a relative basis in deflations than it has in inflations. Thank you. We agree on something.
If the Fed lets the economy deflate, gold should do amazingly well.
I think so. In inflations, gold goes up in nominal terms, but so does stocks, so does real estate, so do a lot of other things. In deflations, there's only two things. There's cash and there's gold.
Yeah, good point.
Guys, it's 8:30 and I apologize, but I have dinner plans. That's
fine.
I have
to told you 8:30.
I genuinely had a ball. I hope that you guys will invite me back. You guys are both very smart, very gracious gentlemen. I loved it that we could talk so openly and that we could disagree without being disagreeable, which is very rare these days.
It's Adrian, non-existent these days.
Adrian, your knowledge of securities and economics is unparalleled. It's just brilliant to talk with you. Rich, I've enjoyed our friendship for 20 years and it was great seeing you. I really had a wonderful time and I would be honored if I'm ever invited back.
Yeah, great.
You will be. And I just want to say thank you, Porter. All the things I said, you know, they're from the heart. We think the world of you. World is better with you back in the game. So glad to see that, as are many of the comments here tonight. Adrian, think the world of you always, as you know. And all of you, we think the world of you. That's why we put this on. Just want to, before we break off, I just want to wish everyone and your families a very happy Thanksgiving, despite all of the horrible things we talked about for the economy and the world. We all have plenty for which to be thankful. Don't ever lose sight of that.
For sure. Thank you guys very much.
Thank you. Thank you.
Good night.
Thank you all.
Good night.
Good night.